Overview of Income Tax Return. As prescribed under Section 24, Title 5, Title 6, and Title 7 of the National Internal Revenue Code, as amended by Republic Act 10963, otherwise known as Train Law. Its implementing rules and regulations number 8-2018. For the definition of terms, income means all wealth which flows into the taxpayer other than as a mere return of capital, whereas the taxable income means the pertinent items of gross income specified in the tax code as amended, less the deductions, if any, authorized by such types of income by the tax code or other special laws. Gross income means all income derived from whatever sources. It includes, but is not limited to the following: the compensation for services, in whatever form paid, including but not limited to fees, salaries, wages, commissions, and similar items. Also form part in the gross income, or gross income derived from the conduct of trade or business or the exercise of profession, gains derived from dealings in property, interest, rents, royalties, dividends, annuities, prizes and winnings, pensions, partners' distributive share from the net income of the general professional partnership. Exclusions from gross income. The following items shall be included in gross income and shall be exempt from taxation: life insurance, amount received by insured as return of premium, gifts, bequests and devices, compensation for injuries and sickness or sickness, the amounts received through accident or health insurance or under the Workmen's Compensation Act as compensation for personal injuries or sickness plus the amount of any damages received, be it a suit or agreement, on account of such injuries or sickness. So exempted po siya for, or it should not be included as part of the gross income. So, other than that, the retirement benefits and pensions and gratuities, etc., and miscellaneous items. The following are the items under the miscellaneous items that should not be form part of the gross income and shall be exempt from taxation. Ito po yung income derived by foreign government, income derived by the government or its political subdivision, prizes and awards in sport competition, prizes and awards which met the conditions set in the tax code, the 13th month pay and other benefits not exceeding 90,000 pesos. So what if yung 13th month pay and other benefits exceed na po sa 90,000 pesos? Ano po yung mangyayari doon? Yung excess po sa 90,000 pesos will form part na po of the taxable income. GSIS, SSS, Medicare, and other contributions, gains from sales of bonds, debentures, and other certificate of indebtedness with maturity of more than 5 years, and gains from redemption of shares in mutual funds. So, alam na po natin yung mga items that will form part of the gross income and what are those items na excluded from the gross income. Now, we have to know the items na deductions or allowable deductions from the gross income. First, we have the optional standard deduction, an amount not exceeding 40% of the gross sales or receipts for individuals and gross income for corporations. And second, we have the itemized deduction. The following itemized deductions are allowed by our tax code as deduction from the gross income. First is the expenses. It should be ordinary and necessary in carrying out the trade, business, or the professional expenses. Second is the interest. The amount of interest paid or incurred within the taxable year of indebtedness in connection with the taxpayer's profession, trade, or business. So it is allowed as deduction from the gross income. Third is the taxes. Uh, these are the taxes paid and incurred within the taxable year in connection with the taxpayer's profession, trade, or business. However, not all taxes are allowed as deduction from the gross income. So, what are the exemption? First is the income tax provided under this tax code. The income tax imposed by the authority of any foreign country, estate and donors taxes, taxes assessed against local benefits of any kind, tending to increase the value of the property assessed. So, uh, taxes, so losses, debts, bad debts, these are the limited deductions. So, kailangan pa natin ng proof of losses or bad debts before we can deduct it to our gross income. Next, we have depreciation. To continue, also allowed as deduction from the gross income is the depletion of oil and gas wells at mines, charitable contributions and other contributions, research and development, pension trust. Note that not non-resident alien individuals are not allowed for this deduction. And the general professional partnership may avail of the OSD or the standard optional standard deduction only once, either by the GPP or the partners comprising the partnership. Not all individual income taxpayer who is earning income is required to file the income tax returns. So let us all know who are these individuals or who are these taxpayers who are not required to file the income tax returns. First is we have an individual earning purely compensation income whose taxable income does not exceed 250,000 pesos. Second, we have an individual whose income tax has not been or has been withheld directly by his employer, provided that such individual has one employer for the taxable year. Third, an individual whose sole income has been subjected to final withholding tax or who is exempt from income tax pursuant to the tax code and other special laws. Fourth, individual who is a minimum wage earner. Fifth, those who are qualified under substituted filing. However, all the requirements must be present para po ma-qualified for substituted filing. So first, employee receive purely compensation income regardless of amount during the taxable year. The employee received the income from only one employer in the Philippines during the taxable year. Third, the amount of income tax due of the employee at the end of the taxable year equals the amount of the tax withheld by the employer. The employer's spouse also complies with all the three conditions previously stated, and the employer files the annual information return or the BIR Form 1604CF, and the employer issues BIR Form 2316 to each employee who are exempt from filing the income tax First, we have the income from abroad of a non-resident citizen who is a citizen of the Philippines who establishes to the satisfaction of the Commissioner the fact of his physical presence abroad with a definite intention to reside therein. A citizen of the Philippines who leaves the Philippines during the taxable year to reside abroad, whether as an immigrant or for employment on a permanent basis. Income from abroad of a non-resident alien who is a resident of the Philippines who works and derives income from abroad and whose employment thereat requires him to be physically present abroad and most of the time during the taxable year. A citizen who has been previously considered as a non-resident citizen and who arrives in the Philippines at any time during the taxable year to reside permanently in the Philippines will likewise be treated as a non-resident citizen during the taxable year in which he arrives in the Philippines, with respect to his income derived from sources abroad until the date of his arrival in the Philippines. And the overseas Filipino workers, including overseas seaman, an individual citizen of the Philippines who is working and deriving income from abroad as an overseas Filipino worker, is taxable only on income from sources within the Philippines, provided that the seaman who is a citizen of the Philippines and who receives compensation for services rendered abroad as a member of a complement of a vessel engaged exclusively in international trade will be treated as an overseas Filipino worker. Please also note a Filipino employed as Philippine Embassy, consulate service personnel of the Philippine Embassy, consulate is not treated as a non-resident citizen. Hence, his income is taxable. Also exempted from income tax are the General Professional Partnership, Government Service Insurance System or the GSIS, Social Security System or the SSS, Philippine Health Insurance Corporation, local water districts. Since we are equipped with knowledge on what are those items that will form part of the gross income, and what are those items that will form part of the allowable deductions? So let us now know how to compute the income tax payable for individuals. So, madali lang po. Yung gross income less the allowable deductions. Yung allowable deductions po natin, we have itemized deductions, or we have the OSD. OSD is the 40% of the total sales or receipts for individual taxpayers. So, nakuha na po natin yung net taxable income. Based po sa net taxable income, gagamit po tayo nito ng tax table. If the net taxable income is not more than 200,000 pesos, wala po siyang income tax due. However, if more than 250,000 pesos po siya, may bracket po doon kung ano po yung kung saan po sa bracket siya belong to compute that income tax due. If meron na po tayong income tax due, i-less po natin dito yung tax withheld per BIR Form 2316 para malaman po natin kung may income tax payable pa po ba tayo. This another table is based on the preferential rate of 8%. If the taxpayer's source of income is purely self-employed. So, meron na po tayong gross sales from business or practice of profession. Add non-operating income para makuha po natin yung total taxable income. Since it is 8%, preferential 8% po yung pinili natin, magdeduct po tayo ng amount allowed as deduction, which is a 250,000 pesos to arrive at the net taxable income. Yung net taxable income po natin, i-multiply po natin ito ng 8% para makuha po natin yung income tax due. Pag meron na po tayong income tax due, i-deduct po natin dito yung tax withheld. Ito po yung supported by 2307. Then, we'll know if may income tax payable po ba tayo. For mixed income earners based on preferential tax rate of 8%, so sa income tax return po natin, makikita po natin yung column for compensation and for column for business income. Dun sa compensation, i-filled out lang po natin yung compensation income less the non-taxable income and 13th month pay with a maximum of 90,000 pesos. Otherwise, taxable na po yun as said earlier. To arrive at the taxable compensation income and using the tax table to compute the income tax due on compensation. Now, for business income, input lang po natin yung total gross sales or receipts based on practice of profession or trade or business. Add po natin yung non-operating income to arrive the taxable business income multiplied by the rate of 8%, yung preferential rate po natin. So, we can have the tax due on business income. So, yung total income tax due po natin is isa-sum up lang po natin yung compensation income, yung tax due on compensation plus the tax due on business income. And deduct lang po natin yung BIR Form 2306 sa tax withheld po for compensation and for business income yung 2307. To arrive yun sa income tax payable. Withholding taxes for individual payee whose gross annual business or professional income did not exceed 3 million pesos. Again, did not exceed 3 million pesos. Yung withholding tax po natin is 5%. Otherwise, 10%. For those non-individual payee po, whose gross annual business or professional income did not exceed 720,000 pesos, the withholding tax rate is 10%. If it is more than 720,000 pesos, then the expanded withholding tax rate is 15%. If upon the computation of the income tax due less the withholding taxes, meron pa din tayong net income tax due, then we have to file and pay the same on or before April 15. However, if the tax due exceeds 2,000 pesos, the taxpayer may elect to pay in 2 equal installments. The first installment shall be paid at the time the return is filed, and the second installment is on or before October 15, following the close of the calendar year. So, saan po tayo pwede mag-pay ng ating second installment? Sa ating mga authorized agent banks. within the jurisdiction of the RDO, where the taxpayer is registered.